Now let's have a look at stochastics. This is by far one of my favorite indicators. It's also the indicator that will save you a lot of money. What I'm going to do is I'm going to add stochastics and then we will talk it through. It's very hard to explain without actually seeing it. So we're going to move on over to indicators list. We're going to go to custom. And towards the bottom, you'll see stochastic. We can have a look at about, go to common, we don't need to change that, and we look at inputs. Now inputs is where we're going to be setting the period. I'm going to increase this K period to 14. The K period is the most important period that we're looking at stochastics. It's basically how many candles is it going to be looking at, like many other indicators. I find that a K period of 5 is very fast. It's for very aggressive traders. Please feel free to try it out if you are finding that 14 is too slow. Then we're going to move across to colors. We can leave those colors and we go to levels. Once again, they have a color set for silver, which is quite hard to read on a white background. So I'm going to select black. We can leave the levels at 20 and 80. I'll explain what these levels are for in a minute. And we click OK. So now we see stochastics at the bottom. What stochastics is doing is it's measuring the volatility of the market. And how it does this is it looks at the current as well as the recent candles, depending on how far you set that K period. We've set it to 14, so it's looking at the current and the previous 13 candles, and that's the period it's looking at. Now it's measuring the size as well as direction of the candles itself. So if you have a period where the market has been very quiet, like across here, we have all these small candles for a long period of time. This is setting it up as a trend, saying that the markets are not very volatile, they're not moving very much, and that's how stochastics will be measuring it. How we use this is when stochastics goes above 80, it's telling us that the market is in an overbought position. What that means is that based on recent history, the market has been moving a certain amount. The average candle could be a certain size, moving in a certain direction. And now that it has gone into overbought, it's saying that based on recent history, the market has moved up too much. When it goes below 20, it is telling us that the market is in an oversold position. This means that based on recent history, the market has moved down too much. Now this is telling us two things. Firstly, if you are looking at entering a trade and stochastics is already either overbought or oversold in the direction that you're wanting to trade, it's telling you too late. The market has already happened. The trade has already happened. The other thing it's telling us is that we are very likely to get what some people call a whipsaw motion or a pullback. We find that very often the market, once it's picked up a trend and it's trading along, if it starts deviating too much from that trend, it very often pulls back so it can fit more into where it was trending before. And this is where a lot of new traders lose a lot of money. If you've been to the online forums and you've read a lot of people saying, you know, my broker is trading against me every time I put in a buy or a sell, the market suddenly switch around. That's not possible. Not even a bigger, well-known, established broker like CM Trading is able to do that. Remember, the average trading volume per day is $4 trillion US. It is impossible for your broker to be able to do that. What's really happening is that the market has deviated from its general path too quickly, and a lot of people jump on that opportunity to trade it pulling back. So as a new trader, you come in and you see a dip like this, and you see this massive short candle, and you think to yourself, oh my goodness, I'm going to jump in there. I mean, look how much it's moving. I could make a fortune overnight. So you go ahead and you place your sell, and within 2 hours the market has reversed, and you've gone heavily negative, you've hit your stop loss, and you've lost your money. So you will find a lot of my strategies that I use, I very often have stochastics in there, just to tell me when am I being silly by entering this trade. If everything else is lined up, but stochastics is telling me it's overbought, then it's too late. If it's oversold, it's too late. So stochastics can be used as a fantastic confirmation indicator, but it can also be used as a trigger. If you think about what we've just spoken about, if the market is in overbought or oversold, very often we see a slight reversal. So like in a situation like this, we've seen that the market has come down, and at this point, it's gone into oversold. So if you wanted to enter the trade here, Stochastics is telling us no, it's too late, the market has moved too much, we're expecting that whipsaw motion. And it happens. You'll see here that it went oversold. Stochastic comes back into normal territory, which is between the 20 and the 80 line, and the market suddenly starts trending up. We have a similar situation shortly after, where Stochastics has gone into overbought, and the market has reversed itself to pull itself back into the way that it was generally trending. It happens far more often than you would think. Here the market was heavily overbought, Stochastics has moved back into the normal zone, and the market pulls back. Goes into oversold, the market starts pulling back. This happens time and time again, and this is unfortunately where those new traders lose a lot of their money, is that they see a big movement and they think, oh, this is going to be perfect, I'm going to jump in, I'm going to throw a couple $100 into this and I'm going to make thousands. And then it reverses and they lose the trade. So Stochastics can save you from that sort of situation, and it can also be used as a trigger on its own. Please remember that no Forex trading system is complete without some kind of confirmation. It needs a trigger, and it needs a well thought out stop loss and take profit. We'll get to that later.